Good afternoon. We are going to talk today about how to trade your levels on a chart rather than your emotions. Now, what do I mean by that? Simply, it is not uncommon to get into a trade considering how much you're going to win. That is what most traders think of when they get into a trade. And what I'm going to challenge you to do is when you get into a trade, first think about how much you could lose. All right? This is important if you want to learn how to trade levels on your chart, whatever that might be. You might be a supply and demand trader like me, and so your levels are in relation to supply and demand zones. You may trade based off of VWAP or MACD or all the different other indicators that are out there, all of them being great. And what I'm going to talk about can work for any level that you personally use on your chart. But the examples I will be showing all revolve around a red box up here, which is a supply zone, and a green box here, which is a demand zone. In order to trade your levels without emotions, in my opinion, the first thing you need to get right is your allocation per trade. That is different for each of us, okay? I don't know if you're trading from an account that has $2,000, 20,000, 200,000, or in the millions. The amount that is in your account has nothing to do with being able to trade without emotion, but rather by levels. If you can create an allocation amount that you are comfortable with losing. Now, the first amount that pops in your head, if I were to ask you, how much are you willing to lose on a trade? If you don't mind, put that amount in the chat now. How much are you personally willing to lose on a trade? What I'm going to say is this: cut that amount in half, and that is the amount that you're probably comfortable with losing. Whatever amount popped into your head, cut it in half, and that is the amount you're probably comfortable with losing. The first amount that you think of, you might think you're comfortable with losing it, but if you find yourself in a losing trade, you're going to figure out pretty quick that you're not comfortable with losing that amount. What I did when I first started trading supply and demand just over 2 years ago now, Trendy John asked me that question. The first amount that popped to my head was $1,000. He told me to cut that amount in half. And so for the first year of trading supply and demand levels, my allocation amount per trade was $500. I found that I was much more comfortable trading off of levels rather than a percentage that my position was down or up, because I'm not just talking about losing trades. Has anyone ever found themselves in a winning trade? You look at the percentage that the trade is up and you want to sell out just based on the dollar amount that the position is up or the percentage that the position is up. Even if it hasn't hit your target, you're looking at that amount and you get loss aversion where you're like, oh my gosh, it's up $500. I don't want to lose that, so I'm going to get out here even if it's not at my target. Has that happened to anyone, or is it just me? So I'm not just talking about trading levels based on losing trades. I'm talking about trading levels based on winning trades as well. Okay? Get comfortable with the allocation amount that you're allocating per trade, and you will find that you have a much easier time trading based on levels rather than percentages or rather than the amount that your position is down or up. So I'm going to give you an example of a trade that I'm actually looking to take probably today, more than likely. All right. So whenever I find a demand zone and a supply zone on a symbol, in this case, Nextera Energy, that I'm interested in trading, the first thing I do is I look at the price that I am going or willing to start the trade in. And for me, that is $83.66. Then I look at the amount. In this case, it is the bottom of this demand zone that would be my stop. In this case, it's $81.47. That is about $2 of risk. So if I get into this trade, I will not stop out of this trade regardless of what the percentage looks like, negative or positive, until it hits one of my levels. In the case of a stop, I commit to a candle close. I'm using a daily chart. That means it would be a daily candle close below my stop. I'm able to trade like that because I am comfortable with the amount that I allocate per trade. So if I get into knee at 83.66, I'm risking about $2. I like to scale into my trades as they pull back into a zone because as supply and demand trader, I am typically always buying a dip, okay? And it's not that I don't think the demand zone is going to work. That's not why I scale in. I scale in because, the top of the zone, it might not be where price turns around. So I want to give myself room inside of the demand zone to be wrong and then add to the position within this demand zone at a level on my chart. In this case, that would be a double stack of trendy edges right here. So my plan for knee, I know I have a $2 risk from where I start the trade. My reward is up here at 88.37 by 91. I'm just going to say $88 would be the reward. That's a $2 risk for a potential $4 reward. That meets my risk to reward tolerance. Okay, so that's the first thing I look at. What is my risk? What is my reward? Now, I commit to a candle close, and it's very possible that the candle closes down here at $81 and my risk increased to $2.50. But because I'm okay with the amount allocated to the trade, that's all right to me. Okay, now let's talk about once I'm in this trade and when price gets to or close to a trim and I happen to look at my monitor tab and I look and see, oh wow, I'm up 40%. I better go ahead and trim right here because I'm up 40%. That is the same as allowing emotions to dictate your trade rather than levels. I will trim. It doesn't have to get exactly to 85.06, but it's going to be within 5 or 10 cents for this stock because the amount that it moves a day is not very high. 5 to 10 cents within this target, that's where I'm going to trim. What I find to be the easiest way to set up my trims at levels rather than looking at percentages is once I'm in the trade, go ahead and put my sell in ahead of time. Does everyone know how to do that ahead of time? If you don't, I can show you really quick how you can set your, okay. So let's take a look here. I personally, for this trade for knee, I actually just got out of a winning trade in knee, but I'm looking to start a new one. And I was in the October 18th, which have about 3 weeks to expiration, but I like to give myself time trading in EE. So rather than look at the October 18th, I'm going to look at the November 15th, which is the monthly for knee. I look at what open interest is, the volume, etc. Looking out this far, you're not going to see a lot of volume like you would on a closer dated option, but open interest is something I take into consideration because I don't want to get into an illiquid stock. So looking at knee for November the 15th, I can see here that the $85 calls have good open interest, good volume today, but I would be scaling into the trade and my ad would be down here at about 82.76. So I want to go a little in the money right here to 82.50 and consider, do I want to buy the 82.50 or the $85? It's a personal decision, honestly, but I would rather be further in the money than out of the money. So what I'm going to do is I'm going to buy the 82.50 calls right here. And then I'm going to show you how I will put my bid in for my first trim. And you can see filled on that order, right, for $4.90, which happens to be half of my allocation amount. I allocate $1,000. That means when price gets down here, I will be looking to add however many contracts I can for the remaining $510. So I have the bid in, or I am in the position. Now let's set up our trim, and I'm going to show you two different ways that you can set this trim up, okay? So let's go back to that trade. Right click where your position is at and go to sell and single. All right. Now, my target is 85.06, right? So this is the first way you can set that sell up automatically. Right here is the price of the option right now. This is the expected NEE price at this option price level. If I move this up, it will show that the expected knee price is moving as I move this up. And remember, 85.05 is where I would be trimming. So if I move it up, it gets near that 85.05, and I like it to be a little below, to be honest. Trim a little early. So I put that at 560. I hit confirm and send, hit send, come back to the chart, and you can see that my bid is setting there to sell the contract that I just bought. All right, cool. So that's one way to do it. And here is another way to do it. So I'm going to go up to the trade tab, right click on my position. This green flag right here tells you where your position is at. Right click, hit sell, single, boom. Hit this cogwheel, left click on this little hidden cogwheel. You can't see it unless you hover it. It pops up order rules. So I'm wanting to sell this contract at 85.05. So sell is correct. For price rules, I'm going to change this to market. Right down here where you see symbol, if you click just below, it's going to automatically fill in the symbol for you. If you click below method, it's automatically going to fill in mark for you. The trigger, remember, I'm looking to go up, so it is greater than or equal to, and my trigger amount is 85.05. So I type in where I want to sell at. I hit save, go to confirm and send. This is very important when you first start doing this, that you read and make sure that it is where you want to sell at. So this is selling one contract of knee at or above 85.05. You hit send. We'll go back to the chart, and this is how it will appear on your chart. Why do I use mark? Because mark equals price, and I want price to get up to this level, 85.06. I put 85.05. So the mark, the price, that's my condition to sell. And if I hover over, you can see that order is set in place. That keeps me from getting out of trades early or trimming just because the P&L is up a certain percentage or what have you. It allows me to trade that a level without emotion. And that is a FOMO emotion, or because loss aversion and I am negative 35%, and it's like, oh gosh, I'm going to get out. Well, really? Because you entered, in this case, you entered the trade because price had pulled into demand. Yeah, your position is down 40%, but is price still in demand? If the answer is yes, then I'm simply trading emotion, and I'm really not okay with my allocation amount because I'm getting out of a trade when price is still in a demand zone in this case. And you can substitute in whatever levels you trade off of. But if price hasn't broken below your level, then don't get out of your trades. Okay? So that is how I have learned how to trade with discipline the levels on my chart rather than from my emotions, both positive or negative emotions. Another thing that will help you a lot, I believe, in entering a trade is when you find a setup, okay? And it is something that you want to trade, rather than sitting and staring at that list for days, it is so much better, in my opinion, to find that level that you want to trade, then create an alert at that level. Let's say I want to get into IWM here at this lower weekly edge. Well, if I'm sitting and staring at this chart and price starts to go up, I can have FOMO, right? And be like, well, I know it didn't come down to where I wanted to get in, but I'm going to miss out, and I'm going to miss out on these profits if I don't go ahead and get in now. Well, if I create an alert where I want to enter a trade and make myself a note on that alert, and I spelled that wrong, but that's all right. And then I just don't come back to this chart, right? If that is the place I want to enter the trade, in order to keep me from getting in when price is up here and I feel like, man, I missed it. I didn't get into the trade, and now it's going to just keep going to eternity. Well, create you an alert, and then don't come back and stare at the chart waiting for it, because I have found in my experience, I will talk myself into getting into the trade before it has hit my level that I want to get into the trade. So use alerts. You don't have to set up automatic orders at your trim levels or your target levels. For instance, on this trade, I could just create an alert here at my target level or my trim level and write a note to myself to trim there, and then just let it be until this alert goes off. I go over to my position, Sometimes you're absolutely pleasantly surprised at how much the option is worth when price gets to your target. I believe setting and staring at your P&L can cause you to make very emotional decisions based on uh, emotions rather than the levels that you had set when you got into the trade. You can learn to trade supply and demand. Visit us in the Trendy room here at Simpler. Trendy John, and I teach in there all day about how to trade supply and demand, as well as provide a lot of real time trade alerts. So join us over at Trendy if you're interested. That would be awesome to have a new member of our Trendy family. All right, guys, that concludes my time. Much love, fam.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me over.